Hello there, everyone. Welcome to another edition of Tip Tuesday. I see Trevor was on early this morning. Hello, Trevor. Welcome in, along with you and everybody else that is joining us live and those that will be joining us later. I appreciate you guys joining us for these each week and desire for them to help you along your trading journey as we kind of drop these little nuggets here and there. So today's topic is winter wealth strategies. And the idea here is not something that we talk about very often. In fact, it is not something that I personally do. It doesn't mean that you can't. And certainly there are some people that do this. There are even large organizations that do this kind of thing. But it's the idea of essentially sector rotation. So that may be a phrase that's unfamiliar to some of you. So I'm going to go ahead and kind of break down what that is. So um, every company is in some type of general industry group. So in other words, they're linked with something. So I'm going to actually just share my screen here a little bit and get you guys a sense of what this looks like. So I'm going to use charts by Tradeway here. And one of the things that I'm going to do is I'm going to go over here to the find, and then I'm going to use the heat map because this will show us a little bit about what we're really looking at today. So what you can see here is that basically this is the S&P 500. I can do this with different ones, and I will here in just a second. But you can set this to a daily chart, a weekly, monthly, 3 months, 6 months, a year. And let's do 3 months for now to kind of get a sense of what we're talking about. So the idea here with sector rotation is that there are certain sectors or industry groups that perform better at certain times of the year. And so the idea here is that we would be in a general kind of a buy and hold ish type mindset where we are going to go into this sector and we're going to hold that sector for a long period of time. For that period of time, let's just say normally 2 to 3 months, where that particular industry is going to outperform other industries. So what do some of these industries look like? I mean, you have technology, which is, Oracle, Apple, First Solar, and then there's a bunch of others that didn't come up under the 3 month. Media, finance, healthcare, industrials, real estate, utilities. Now, I will say, let's just pause here for a second. Utilities is one of the most common sector rotating opportunities that people have. That and your consumer discretionary up here. There are certain times of the year when people are going to go out and do more with the retail, and those are going to have better production than other times. But basically, your energy and your utilities, those are going to be some of the most common sector rotational type things, because you kind of think about, well, healthcare, does healthcare really change from one quarter to the next? I mean, no, not really. People are still buying stuff. Well, does Google media really change from one sector to the next? Not really. Does finance? There are some time periods, but with the finance, it's more based on things like raising rates or lowering rates and things like that, where they would be more impacted by something like that, and people might rotate into that sector kind of thing. And the same thing here, of course, with Apple. Now there may be times when Apple and the hardware and semiconductors do better than others, but for the most part, it's not going to be that. It's going to be your food, it's going to be your utilities, your energy, your consumer discretionary, those kinds of things is where you would see a lot of that sector rotation. Now, does that work? Is that something that we should be actively doing? Again, I mentioned earlier, it's not something that I necessarily think about or do or want to necessarily engage in, because I spend a lot more time looking for patterns that are going to last anywhere from a couple of days to a couple of weeks. So when you consider that our major strategies are based on trades that are going to last 2 days to 2 weeks, we're not going to be necessarily thinking through a buy and hold or even a sector rotating mentality. But it doesn't mean that you can't or that it wouldn't be profitable for you, depending on your desire and what you're trying to do with your trading, particularly if you're looking at it from a slightly longer term, kind of a semi buy and holdish mentality. So that's the idea there. Obviously, we'll go back to a day and you're going to see a lot more stocks pop up. So you can see some of these individual stocks here that are now up there. Vehicles might be another one where there are certain times of the year where they might see a higher sales number than others. So obviously something like this would involve you doing studying, putting in the effort there to say, well, when do they tend to do better? The other thing I would say about something like this is, does it work? You can have an idea, but it doesn't do you much good if it doesn't work. So one, you're going to have to do your research, and then two, you're going to have to figure out if you know which sectors to rotate in at the right time. So obviously there's a little bit of timing that is imperative here, that you get the timing right. You don't want to go, into energy as it's about to take its dip. You want to get in while it's on the low and as it's about to make its way back up. Now, could you do that from a charting perspective? I would think so. But again, this kind of mentality, this idea is that you're going in for a period of time, right? For a quarter or whatever. And you're going to stick with that thing for a quarter and kind of ride that out. So again, what I would say is just go out there and pick something here and see how often does it, move. Is there, I mean, obviously our whole system is based on patterns, right? Is it predictable, repeatable, and reliable? So if you say, all right, I'm going to move into energy I'm just going to throw something out there, in May. Okay. So I'm going to move into oil and gas in May. Well, historically, does oil and gas as a whole, right? So you're just looking at all these individual companies, Exxon, EOG, MPC, Phillips 66, Chevron, you just go through the list of them, right? You're going to pick 4 or 5 of these things and just say, historically, do these companies increase in value for May, June, and July? I mean, that seems like something I think would happen. Is it true? Right. So we can have an idea, but then we have to go out there and make sure that it's true, that those industries actually do go up during that time period. You might look at the utilities and say, well, as it gets colder, October, November, December, January, February, March, like, do the utilities increase in value? Is that something that happens regularly, or is that just something I think would happen, but in reality, it really doesn't happen, or it's not clear enough for me to say, yes, obviously, this is a good place for me to go during those cold winter months because they see a substantial increase in value. If you're doing your research and you're finding that basically I don't really see any predictable, repeatable, and reliable patterns, then this may not be a thing that you're going to want to do. So obviously it has to work, and there has to be a reason behind it. Otherwise you wouldn't do it. So this is the S&P 500. It's what we use most often. But again, you could go over here. You could look at the Dow Jones. You could see the industry groups listed here. And you can see that the industry groups stay the same. Okay. There's only 30 of these listed, so you're going to have less, obviously. And then you can have the NASDAQ as well. Again, industry groups stay the same, but you might get a different listing of stocks here. But for the most part, there is some overlap here, obviously, between some of these that you're going to see, Microsoft and the NASDAQ, and also the S&P 500 there. So that's kind of what you're looking at there. That's the idea behind this. Again, it's not something that you're going to get in for just a day or two or get out. It would be something that you feel like you're going to move into for a season. And you want to keep that in mind. All right. All right. Thanks, Ernie. I just saw your note over here. Yeah, you wouldn't want to just see my frozen face and miss out on everything I was saying. So hopefully that was going smoothly for everybody else. But yeah, you want to go in there and again find something like a heat map and go in and do that. And so we'll do that real quick. We'll flip back over here just so you guys can kind of see again what this would look like. Let's go back out here. All right, and let's just go and kind of do this. So what I'm going to do now is I'm just going to type in, let's just say something like, we'll do oil and gas. Let's just kind of hone in on Exxon here. So research chart, and then let's go out here and let's look over we'll do a 3-year period. We'll set it to monthly. Just see if we can see anything that tends to repeat. All right, so what we would need to do now is to say, okay, so obviously there are clear candlesticks. Let's do this. Let's go out a little bit further. Let's go out 10 years on a monthly. All right, so when are the biggest months? So obviously what I would be looking for, is there a repeat well, I got to switch over to Exxon. That's going to help. All right, so is there a repeat of months? Is there a flow where I look at this over a long period of time and say, yes, generally speaking, during this time period, this particular month or this quarter, Exxon does particularly well. And what I'd have to do is I'd have to write that down. All right, so this is February, March, and April 2014. Obviously a strong set of months there. Now, for the most part, it then just goes down. I'm not going to learn much from that because pretty much that stock just went down all year. Now we're back over here. October was a huge month. Now, is that just based on something that was happening in the overall S&P, or is that something that was specifically related to this stock and perhaps this industry? Here we go again, February, March, April. Oh, interesting. Okay, February, March, April, February, March, April. Huh. Okay. Well, that's 2 years now where we've seen a pretty significant rise in oil and gas, February, March, and April. What about the next year? Nah, no go. See, I mean, so, okay, well, let's go out to the next time. February, March, April. Okay, so not there for sure. April, May, June. Okay, so it did get a 3-month run up, but definitely not in those particular months. All right, January, February, March. Maybe, right? Maybe. January, February, March. Oof. Well, that didn't work at all. All right, not at all. All right, what about the next year? January, February, March. Cool. I mean, great. January. Wow. February, March. Okay. Next time through, January, February, March. All right. What I would gather from here is that looking at this chart, maybe it's not so much the months that I thought. I thought it might be better, towards, headed into summer. It looks like it's actually before that, January, February, March. If we were to see a significant move up, it seems to be over that quarter where oil and gas has its thing. Now, if you do this on a consistent basis, guys, I think what happened very clearly is that there are going to be some months where you are not going to like those results at all. I mean, rotating into that sector just before, right when COVID hit. Now, again, we can look at that and say, okay, well, that probably makes a lot of sense. So let's rule that one out because that was obviously COVID. But just a normal month, January, February, March, that was pretty great. All right, let's go back here. January, good. February, terrible. March, not so good. But as a whole, what I would want to do then is to say, well, over a 10-year period, do I see something that is predictable, repeatable, and reliable in oil and gas? Now, we're just looking at one stock here. So what we would need to do is go back and do something similar with another big company. Let's just say Phillips 66 here. And say, what, did they do similar things? Is this industry wide, or was that just is it just Exxon? Well, January, February, March, April for them. Okay, a little bit different. And And then over here, let's see. Yeah, not so much. What about here? December, January, February, March, April. Huh, weird. It seems to be a little bit off with them. And that, do you guys find that kind of strange that they're close, but a little bit off? So over here, January was good, February, March, okay. And then I think what you'd have to do, and obviously here's COVID again, so that looks pretty similar. We can ignore that one. January, not, see, they're never, this stock seems to never be as good in January. February is good, March is okay, but it seems like constantly, there's one January, there we go, February, March is okay. So we would need to do this and just see, all right, is this stock specific or industry wide? So stock specific or industry wide. So is there a particular company that's doing better in a stretch, or is it the industry itself? Now, again, guys, you would have to do this with multiple different oil and gas stocks, and then you need to do something similar, obviously, with your utilities. You need to do something similar with your retail. But if you wanted to do something like this, again, it's just another way of engaging in something like this. And then what you might find in the process of doing this is maybe I found that, historically, Phillips 66 has a really good March, or April. Historically, I don't know why they just do really well in April. Well, what you can do even then in just doing this research is to say, well, I'm not going to be necessarily sector rotating, but I am interested in having done this research and saying, you know what, I'm going to make a note here to myself that Phillips 66 tends to do really well in April. And so with my short-term trading, I might lean into Phillips 66 in April more often than not, because historically it's done really well. So what you might find, again, it's all about patterns. If you can find something that is predictable, repeatable, and reliable, obviously market tone is going to matter. If we're going through a major bear market like what we did when we hit that COVID of 2020, that's going to impact stuff. So we're not going to consider that as part of our data. But if you just see normal years where there's nothing really just like phenomenal out there, and you say, well, okay, this wasn't an obvious, bear market type thing, then you might find that there is something that can help you even with your short-term trading while you're looking at this kind of sector thing from a long-term perspective. So that's pretty cool. I hope that helped you guys today. I think that's a very interesting way of looking at this, and it may kind of help you just inadvertently find some pretty cool trading opportunities where you might trade certain stocks. Now, I know a lot of us, we're not necessarily trading industries anyway. Even with our short-term stuff, we just trade whatever pattern emerges and looks the best. But if you do find something that seems to be predictable, repeatable, and reliable, it may not be a bad idea to say, yeah, you know what, I am going to try to write this down and think through trading this stock during this month. So maybe something to help you there. If you've got some time, you want to look through and do that, you might find that research is worthwhile. Well, guys, I hope that helps you. Some winter wealth strategies there, a different way of thinking through things. If for nothing else, it's a good opportunity for us to learn a little bit more about the idea of sector rotation. So when you hear that phrase, you'll know a little bit more about what that is and how it works. And it may be happening in your managed accounts. And now you'll know a little bit more about what they're trying to do and whether or not that's likely to work as well as those fund managers might think it is. Well, thanks for being with us for another Tip Tuesday, and we'll see you guys next time.